Thanks, Tim. Thanks for the opportunity to present today. Thank you all for joining. Yes, I'd like to talk to you about Synovix, our world-class lithium resource in Europe. I know that battery metals and specifically lithium are not really flavour of the month right at the moment. Had a great run a couple of years ago now and a little quieter, but it will come again. The supply-demand equation for electric vehicles and batteries going forward is now undeniable. And nowhere in the world is this more evident than in the EU, the European Union, where we operate. There's been a significant amount of money and political commitment to building a European battery industry and to an electric vehicle future. And our project is very well placed to take advantage of this commitment. So I mentioned the project. Synovix is a world-class deposit. There's a couple of reasons behind that. Firstly, its size. It's a very, very large lithium resource, by far the largest hard rock lithium resource in the European Union. Our PFS has demonstrated that we can produce either of the main battery compounds, lithium carbonate or lithium hydroxide, in the bottom half of the global cost curve. We have the flexibility to produce either of those compounds or indeed both. Our location, I'll show you a map in a moment, but we're right in the middle of all the action that's currently happening in Europe. Within 500 miles of our deposit, there's about 6 million vehicles made every year. And clearly every year more and more of those vehicles are being made electric, so that the demand is only going to increase. And our strategic partnerships this year has been very important for us. The last 3 or 4 months, we have established 2 very significant partnerships. Firstly, with CEZ, which is the Czech national power company, 70% owned by the Czech government. They've become our project level partner about 3 months ago and injected 30 million euros into the project at that time. So the project is now funded through and until decision to construct in about 18 months' time. So very important, very good to have CEZ on board. And just in the last week, we've announced a collaborative agreement with the European Union, an entity called EIT InnoEnergy, which is part of the EVA, the European Battery Alliance. And that's for the longer term financing requirements and potential offtake discussions. So basically our plan is to supply up to 25,000 tonnes per annum of battery grade lithium hydroxide, or the carbonate equivalent, into the European battery industry for many years to come. If you have a look at the next slide, just a rundown on CEZ, our in-country partner that I mentioned earlier. Very large company, market capitalisation of about 12 or 13 billion. So a very strong financial partner. I won't read you all of this information, it's there for you to see. But CEZ are committed to renewable energy, committed to sustainable energy going forward, and building battery factories both in the Czech Republic and in surrounding countries as well. The next slide will show you, from a European Union point of view, the goals of the European Battery Alliance. A couple of quotes there from the EBA demonstrating how important they see building a battery industry and how important they see sourcing as much of the raw materials for this battery industry locally as they possibly can. One thing that COVID-19 has done over the last few months, it has really focused people's attention on local supply chains, and the EU is committed to trying to lessen their dependency in the future on Asia generally and on China in particular, the dependency for batteries and for raw materials. And this initiative is part of that. The EU announced only 2 weeks ago the largest green stimulus plan in history, 500 billion euros of expenditure to secure renewable energy going forward. And a large part of that is the establishment of this battery industry and providing the raw materials to that industry. The next slide, our partner in the collaborative agreement is EIT InnoEnergy, which effectively leads the EBA, leads the European Battery Alliance, and is the go-between, the commercial go-between the EU, the EBA, and companies and businesses within the region. And so the agreement effectively assists us in accelerating construction financing and the ultimate commercialisation of Synovix. The quote at the bottom of this slide from Diego Pavia, the CEO of that entity, demonstrates how significant they see the Synovix deposit in achieving their goals. And there's a couple of reasons why they see it as being so important. If we look at the next slide, as I mentioned earlier, the location of the project, the red dot in the middle there, completely surrounded by some of the world's largest and well-known, best-known car manufacturers, but also a huge number of battery manufacturers, both established groups, people like the Koreans, LG, Samsung, etc. Excuse me, but also some names that perhaps here in Australia we don't know quite so well, but significant battery manufacturers that are building a lot of battery capacity within the EU to deliver into this foreseen demand from the electric vehicle industry. If we look at the next slide, as I mentioned earlier, Synovitz is a very, very large hard rock lithium resource. If we took all of the known hard rock lithium resources in the EU, it accounts for about 65% of that total. So as I say, very important. The size is important from the point of view of delivering lithium into the industry there for many, many years to come. We modelled our PFS on a 21-year mine life, but that only accounts for about 9% of the overall resource. In reality, there's sufficient lithium in Synovitz to deliver into the European battery industry for in excess of 50 years. On to the next slide, please. Another reason why the EBA sees this as such an important project, the financial parameters of the project. We concluded a PFS just over 12 months ago now, the highlights of which are on this slide. As I say, a very large project with an NPV of over $1.1 billion US dollars after tax, and an after-tax IRR of nearly 29%. So the economics of the project are very strong. We can produce, as I said earlier, either battery-grade lithium hydroxide or battery-grade lithium carbonate in the bottom half of the global cost curve. Synovitz is a historic tin mine, and so we do get some credits from the production of tin, which is also very, very useful to us. We roll on, please. The key activities for our next 12 months, we are in definitive feasibility study stage, culminating in a bankable study in 16 to 18 months' time. Part of that will involve the FEED, the front-end engineering design contract as well, which is being let as we speak. There'll be some further drilling done on the project. This is not exploratory drilling, but confirmatory drilling to bring a larger part of the known resource up the JORC curve to assist with the debt financing. Our permitting and environmental impact assessments are all well and truly underway. These things are very important. Obviously in the EU, it's important to demonstrate very strong green credentials, and the project happily ticks all of those boxes. So the macro for us looks a lot like this. The EU has committed serious money and serious political wherewithal to the establishment of a European battery industry, and that is to deliver into what is expected to be a very, very large electric vehicle industry. For example, if we look at just Volkswagen and their plans, they have stated that they plan on building 3 million pure electric vehicles in 2025. So if we look at roughly how much lithium that might account for, it's about 40% of all of the lithium that was produced in the world last year. So, and that's just one company. Right next to them, we have Tesla building a gigafactory just out of Berlin. We all know of Tesla's ambitions and how many electric vehicles they plan on building. So the demand for batteries and the demand for lithium is going to grow significantly, and particularly in the EU. If we look at that against the supply equation, there is no battery-grade lithium produced in the EU currently, none whatsoever. So the EU has been historically the second largest importer of lithium in the world, and now they need to try and develop some of their own resources to rely less on imports from overseas. So having now established the basis for the European battery industry, the EU is committed to ensuring that it can deliver on that battery industry, and a large part of that is assisting in delivering the raw materials into the battery industry. And that's why the EIT has been established as the go-between to enact the EU's policy in this area, and why I think it sits very well for Synovitz and the development of our project. So the EIT will assist us post the bankable document from a funding point of view, with talking to financiers, bankers within the European Union, the European Investment Bank themselves, for example, in securing the necessary debt finance to build the project. And there's also significant potential grant money available to us to assist in that funding equation. This is important, particularly from our point of view, a relatively small company, 45 million market cap, as Tim mentioned earlier, versus a commitment for our share of construction finance of about 250 million US dollars as it currently stands. So having, that's a large equation for any small mining company. So having the support of someone like EIT to assist us in finding large portions of the debt finance required is very, very important. Thank you. I think I've run my 10 minutes. Very happy to take any questions. This is an abbreviated version of our presentation. I'd invite you to visit the website to see the full presentation, and also our last couple of ASX announcements that detail those agreements I've been talking about. Thank you very much for your time.
Thanks, Keith. That's a fascinating story, and it sounds like you've kind of laid the political framework so that you can move forward. In regards to the lithium price and the car manufacturers making electric vehicles, when does the lithium price kind of balance out the demand that's coming in the future?
Well, the big swing up in production, according to the major manufacturers, will be about 24, 25. That's the very significant swing up. We know the lithium price has been down for the last year or so. A large part of that goes back to the supply that was secured a few years ago when the lithium price was so strong. And here in Western Australia, we know quite a bit about that, because WA became at that point in time the largest supplier of concentrate to the global markets for lithium from the spodumene deposits here in the West. Now, there's a couple of things about that. The vast majority of that spodumene concentrate can only be sold into China currently, because that's where the spodumene conversion facilities are. There are no existing or planned spodumene conversion facilities in Europe whatsoever. So none of that excess spodumene concentrate sitting here in WA can go to Europe currently. And if the spodumene con goes to China, it will remain in China. China doesn't export lithium. So we have, if you like, two markets emerging here. The spodumene con market, which is basically controlled by China, even in its current form, and what's happening in Europe and Europe's requirement to find vast quantities of lithium going forward to meet their demand in future years. Now, obviously, if you're going to start building a lot of batteries and a lot of EVs in 2024, you can't wait to 2024 to try and secure supply. It doesn't work like that, particularly for something like lithium, which is not LME traded. There's not a large secondary market. So the security of supply needs to happen now.
And did you say that there is actually no lithium development going on in Europe at all?
There's lithium development. There's no production of battery-grade lithium. So there's the slide I showed earlier shows you what known lithium resources there are in the EU, and they are at various different stages of development. If every one of those projects hit the market at full capacity, it's still nowhere near enough lithium to meet the demands just of the EU.
Right, and your partnership with CEZ, I think you pronounced it. Can you just explain that a little bit more?
Sure. So as I say, CEZ is the Czech national power utility. They've historically been a coal miner, and all of their energy historically was produced from coal-fired power stations. They, like the rest of the world, are moving away from coal, and they are very proactive in moving towards green energy. They're a part owner of the largest wind farm in Europe, for example. They have the largest number of electric vehicle charging stations in the Czech Republic, and they're rolling them out currently on a monthly basis. And they have aspirations to build battery factories, certainly one in the Czech Republic and one in a neighbouring country that have been already announced. There may obviously be more. So CEZ became our project level partner about 3 months ago, injecting 30 million euros, about 50 million Australian dollars into the project. This, from our point of view, significantly de-risks the project. It means that we don't need to raise any more money until decision to construct. And at that point in time, I believe we'll have a very bankable project, particularly with the assistance of the EIT and the EU. So I think bringing Ches in and then bringing the EIT in the last week significantly de-risks Synovets and from my point of view means that the project will be built and we will go into production.